Welcome to Coffee and Regs.
Like,
Mhm.
what do you think we can expect from, you've already talked about the emphasis on greenwashing, but what do you think we can expect from the SEC under this new administration? What should managers be keeping an eye on in the future?
It's always difficult to predict, especially in the US political system,
Mhm.
which I think is a little less unified around this topic than the EU. I think the EU doesn't make a secret of the fact that it seeks to drive investment and assets into sustainable finance. I think the SEC, as I mentioned, is looking to be a referee and an arbiter of disclosure at this point. Um, the last administration did take a view, and it's late in the administration rulemaking by the Department of Labor, that funds that took non-pecuniary and ESG type factors into consideration might not be appropriate as default choices for retirement plans and 401k plans. Uh, the new administration has indicated is not enforcing that rule. So we know at least that the current administration is sort of walking back what seemed to be a view that ESG might be interpreted as detrimental to investment returns. On that topic, the jury may still be out. There's a lot of recent evidence that for the life of newer ESG funds, they've been doing just as well, if not outperforming some of their conventional counterparts. I've read that, like all economic trends, you need to test that over a few cycles. ESG funds tend to be heavy in technology, which has done really well. So I think longer term, we'll see what the results are. But I do think we can expect from this administration a desire to, perhaps at least move in the direction of greater harmonization and standardization. That presents its challenges. We haven't touched on those here. The taxonomy and some of the reporting that will have to be done, particularly for funds that under the SFDR decide to classify themselves as having, an ESG goal that's beyond simply, taking ESG factors as a risk factor, but establishing themselves as what they call Section 8 and Section 9 funds that, to a various degree, seek certain ESG outcomes. So I think that a regularization of the language is something we might expect. I think I would expect the SEC to invite comment or to announce that it's making inquiries. I think the process will definitely go slower than it is in the EU. And I think throughout it, we can expect a loyal opposition, within the U.S. political debate about the ultimate value of this. But it's also clear that the market wants this, and I think one of the reasons that the EU has been emboldened, to make these really significant changes in disclosure that, as I mentioned, go beyond disclosure, is because the market is moving in this direction. Whether those are, like politically directed large pension funds in the EU, or even, the younger new investors who are interested to know what their money is doing and care deeply about issues that are paramount in ESG, like climate change or gender equity. I think that if consumers are concerned about this, the SEC will need to be concerned about it. And I think sitting back and just making sure that nobody is saying anything inaccurate will need to be supplanted by a desire to impose some type of ordered, rubric, taxonomy, language standards for what ESG means and what the levels are of how it's factored in. Again, is it just simply you're aware of the risks and you factor that into your process in seeking investment returns, or does it mean that you're seeking a certain outcome, and if so, to what degree are financial returns secondary to ESG outcomes? So I think we can look forward to seeing that, and I think that the SEC is going to be driven forward by what the EU is doing. I think other parts of the country or parts of the world will be further behind still. I think that in other parts of the world, investor appetite, let's say, for example, Asia might not be where it is in the rest of the world for ESG, but it's part of the world where they're certainly aware of ESG issues. And, if you're a large public company, anywhere in the world, the largest asset managers are asking you various serious questions about ESG. So ESG in the asset management world and the fund disclosure ecosystem is just part of a very large global trend that affects everything from corporate governance to the data and information that public companies are reporting.
Yeah, great, Adam. I think this has really been a great, your comments have been great for helpful context and backgrounds. I'm looking at my takeaways and thinking very practically about the impact of the SFDR in the US and the potential need to harmonize disclosures that you're making in the EU with what you're doing in the US to say prevent or to be prepared for the scrutiny in that area, and also that the broader impact of the SFDR that beyond disclosures, but the fact that certain business and risk management decisions will need to be taken into consideration, and just thinking about the how regulation may evolve in the U.S. and things to keep an eye on.
This has been another episode of Coffee and Regs.